Hey everyone, welcome to High School Dropout's Advice. If you need subtitles, please click on the CC button right here. Sometimes it takes 1 to 2 hours after uploading for them to appear. Today we are talking about NIO, if you should buy the dip, the tension between China and the US, the volatility in the stock market, and the long-term opportunities for NIO. So there's no question, we have a lot to cover and we need to start right now. Let's start with the current political environment we are in, which significantly influence our stock. We had major news not too long ago. Biden inactions allows Trump's decoupling to continue. Chinese state-owned oil giant China National Offshore Oil Corp became the latest Chinese company to be pushed out of the New York Stock Exchange. At the moment, companies that are Chinese state-owned or communications companies with a tie with the Chinese government are getting delisted or investigated. If a board member is also in the government, it's enough to get delisted. To understand the direction we are heading, we need to know what Mr. President Biden's plan is for the situation. We had the news that the tariffs on Chinese goods stay in place under the Biden administration, at least for the time being. The inaction of removing the executive order of former President Trump of delisting Chinese companies with ties to the Chinese government shows that Mr. President Biden aligns his thoughts with the former president. But we already see that US companies, US specialists for the economy, and Chinese companies and specialists on the economy would prefer a loosening up of this trade tension and limitation. You can read this here. The overall strategy on China is still in formation, but already the two-way trade war has cost American exporters 300,000 US jobs, according to the Modi's analytics. I'm pretty sure that the Chinese also lost many jobs. I don't think this will do any country good, but this is only my humble opinion. In this interview with Gaolin Yun, a research fellow at the Chinese Academy of Social Science in Beijing, he told the Global Times on Tuesday, noting that Biden might not seek a full decoupling, but might seek a partial decoupling in key technological fields. This might be true and would be better for the two largest economies to at least lift some tension and work together than working against. It would be better for the whole world. Some experts also share my thoughts. I don't think the new administration is increasing its pressure on the bilateral relationship. I think that to the contrary, we can expect some more normalized and more traditional measure of diplomacy. Anyways, I'm not a politician and we are an investment channel. It's important for me to show you the current situation and the risks we face as an investor. I want to add that if the tension increases, it does not necessarily mean that it's terrible for our stock. It's awful for world politics, but might not be too bad for our stock in the long term. What will likely happen is that Chinese consumers will boycott Tesla and buy NIO, as you could see with NIO. We had another catalyst in the stock market which caused some volatility. Goldman Sachs sold 10.5 billion of stocks in a block trade spree. This was on Friday the 26th of March, where it sold 6.6 billion worth of shares of Baidu Inc., Tencent Music Entertainment Group, and VIP Shop Holdings. That move was followed by the sale of 3.9 billion of shares in Viacom CBS Inc., Discovery Inc., Farfetch Limited, IQIYI Inc., and GSC Tech Edu Inc. Wall Street is still speculating on the identity of the mysterious seller or sellers. The speculation is that the hedge fund or family office was in trouble and being forced to sell. So it might have nothing to do with the tension between the US and China. Now that we know what is going on in the market, let us zoom closer and talk about the EV market. China's EV war, investors curb the enthusiasm for NIO, XPeng, other Tesla rivals as earnings test follows, US 124 billion market dropping. Let us have a look at the chart. We see the starting point in December 2020 and we see that over these 3-4 months Tesla gained about 9%, while others like NIO dropped 28.5%, Li Auto 34.15% and XPeng 45.30%. By the way, I made an XPeng video which I link up here and in the description below. We see massive drops here even when the companies got fundamentally stronger. So is this a buying opportunity? Should we strengthen our position in NIO and Co? Let me show you a couple more sources before we get back to this question. I'm showing you the American EV manufacturers and we can see a bigger decline of 40.2% to up to 67.46 from Workhorse. I did a workforce video long before the decline and warned my viewers about the company, but I was a small channel at that time and Workhorse fans didn't like that video. Overall, we can say that the Chinese EVs did better in holding their value than the US ones. The best performer, however, is still Tesla. This also shows the dominance of Tesla in this industry. Let us have some words about NIO at the moment. We are trading for 55.4 billion with a stock price of $35.51 per stock. The BAAS system, the battery subscription program, is expanding in China and gets government support. XPeng vehicles can also use NIO's charging stations, which is a win-win situation for both companies. We should understand that those battery swapping stations and charging points will become an own business on their own. Let me show you ChargePoint Holdings, which will have a network of charging stations in the United States. It's valued at 5.8 billion. So remember this when you evaluate NIO. The SUV sales, which NIO is focusing on in China, had an awesome 2020, as you can see. Each of the electric SUVs was the best in their class. Also, the projections for the earnings look good. The analysts project a quadrupling in revenue within 5 years, which is fantastic. For the short term, we had a pause of 5 days for NIO vehicle production because of the chip shortage. This is a short-term thing, but the stock took a 10% dive based on this news. As a long-term investor, we should not worry about these minor issues. We know that the semiconductors will follow and will be built. Those companies want to make money too, and they will ramp up their production line. If we are invested in a fundamentally strong company, those little noises from the news, social media or politics will create a more volatile stock, but the fundamentals will push it up. Let me show you an example of Chipotle Mexican Grill stock versus McDonald's Corporation. You see that Chipotle return is nearly 3,200% and McDonald's is 530%. But you also see how volatile Chipotle was over the time, with big buys and big sell-offs. They had news like the salmonella outbreak in their food and so much more. The same is with NIO and all other status quo disrupting stocks. You have signed up for a roller coaster ride, so don't get spooked out when it goes down. We are entering an exciting phase from a technical standpoint for NIO. If the support line around $34 holds, we can use it as our buying point. Even if it breaks, I think it's a good time to average out and start buying into NIO when you want to build a position. Let me show you this. We can agree that NIO will recover. It will not go straight to zero. The question is where it builds. its support. If you have 5,000 you want to invest in NIO, you can average it out and buy NIO every 2 weeks. I mark it with red dots so you can have an average price. It's impossible to make the perfect buy and sell. It's good enough for us long-term investors to have a good position at a good average price. One more thing I want to give you as a bonus at the end for viewers staying up to this point of the video. China has built and is still building a multi-trillion-dollar infrastructure scheme launched in 2013, which will involve building railways, ports, highways, and other infrastructure from China to Europe and the rest of the world. Let me explain to you why this is so important. First, with the 3.7 trillion and over 2,600 projects, over 100 countries have signed agreements with China to cooperate in this BRI project, which stands for Belt and Road Initiative. The countries participating gets an upgrade on their infrastructure, but this also means that Chinese products like the NIO car get quicker to the end destination with the better infrastructure. Let me show you the world map. We can agree that the ships will take a long time because most shipments worldwide have to sail over the Cape of South Africa, which takes months. With the modern railroads, China reduces the shipments of their goods. This is true for shipments to the Middle East, East Europe, and even Africa. This is Silk Road 2.0. So the Chinese government is building the fundamentals like infrastructure for many countries for their own company to expand in the future, which is good for all Chinese stock in the long term. Anyways, for legal reasons, I have to say I'm not a financial advisor or CPA, so remember, your money is your responsibility. I'm just a guy on YouTube. Please do your own due diligence and hire a CPA and financial advisor. Don't forget to share, like, and subscribe. Many thanks and see you hopefully in the next video. Thank you, bye!